First up today, we're going to discuss crop insurance, and farming groups are making a strong push for government action to get more farmers using insurance to manage risks like droughts, flood and fires. The National Farmers Federation and grain growers, among others, are asking for tax incentives to get more farmers using products like multi-peril crop insurance. But multi-peril products are only available to grain farmers at the moment. In horticulture, many growers are desperate for an insurance solution, as Clint Jasper found out from Western Downs farmer Terry O'Leary.
We're in Chinchilla, just out of Chinchilla on the Western Downs in Queensland. And in the last few years we've faced 3 record-breaking floods and now 6 severe hailstorms. There's nothing worse for anybody in agriculture than losing an uninsurable crop, right before you're about to start harvesting, because all of your input costs have gone into growing and producing it, all the time and effort, and to have that snatched away is a pretty disheartening and cruel thing for anyone to face.
Terry O'Leary can't insure his melons. His farm's been right on a path of destruction from the weather for a number of seasons now.
When you go through and you have a look at all the history of the area, you might have got one hailstorm every 10 to 15 years, but they seem to be getting a little bit more frequent lately.
Has anyone provided you with any kind of theories or explanations about what this turn in the weather or why this has become such an issue now?
No, nobody's been able to come up with anything concrete, but there certainly is a lot of people that are pretty vehemently pointing towards man-made climate change as being the reason for it.
What options do you have to kind of manage that risk at the moment and protect your crop or your income at least from these weather events?
Currently there's nothing available for horticulture, for ground-based horticultural crops like vines that grow on the ground for us here. There is a parametric, I believe it's called, insurance that's coming through now for cyclones and heavy storms, but because all of that there goes off local weather station-based data, and it's a little bit harder to gather that data, I've been told, on hailstorms, that's not included at this stage.
At last week's Drought Summit, the National Farmers Federation called on the government to introduce a 150% tax incentive on farm income insurance premiums over 5 years, arguing this would mean more farmers would be encouraged to take up coverage and the price of it would go down. But multi-peril crop insurance is only available to grain producers at the moment, and the key to expanding a range of products out to different sectors is more data.
One of the things that we've advocated for recently is a full ag census.
The Insurance Council of Australia's General Manager of Risk, Carl Sullivan, says an ag census would be a huge step forward in opening up a whole range of insurance products to the entire agriculture sector.
Not only insurers, but everybody else who needs to be involved in risk management, portfolio management around the agricultural sector can have a very, very finely tuned understanding of exactly what businesses are out there, what they do, how they risk manage, what their outputs are, etc. In that way, you'll start to see products develop that might start to cover strawberry farmers or apple orchards and things like that. It's not until there's enough data there to underwrite that you'll actually see those products come to the fore.
I was just speaking with a farmer before in an area of Queensland that's just had hailstorm after flood after hailstorm. It sounds like an extremely risky area at the moment, and ones that doesn't sound like insurance companies would want to touch, and they're certainly not at the moment. Would that data gathering in the ag census be a step towards helping people in that area find some kind of product that works for them?
Yeah, absolutely. In the sense that by doing a census like that, you're able to start writing product that covers a very, very wide geographic area. And so you're distributing your loss over a larger area. So, when people are impacted by hail occasionally in this area of Queensland, we know that they're not in southern parts of New South Wales. So we can sort of pool the losses over a larger area by virtue of being able to write more product out there. At the moment, the number of policies in force out there for this season, is less than a couple of hundred, out of around 90,000 businesses across Australia in the ag sector. So you can see that with that small number of policies in operation, it's very difficult for insurers to spread their losses.
Carl Sullivan from the Insurance Council of Australia. At the Drought Summit last week, the federal government gave no direct indication it would support the calls for insurance premium tax incentives. but the need for better data and more of it was discussed. In the meantime, for farmers like Terry O'Leary, insurance solutions are still some way off.
Well, like I said, all we would really be chasing would be cost of production insurance. So if we can go through and, at the beginning of each season, lodge what our budgeted input costs would be and just get coverage for that there, I think that would be a fairly simple and realistic and achievable goal for everybody involved in the industries.
Terry O'Leary, a melon grower from the Western Downs. Well, the Queensland Farmers Federation is currently on the road discussing insurance options with cane growers in the Proserpine area. Policy Officer Ross Henry offers his reasons for the lack of insurance options in the horticulture industry.
We live in a volatile climate, so the risk is perceived to be quite high for the insurance companies. The amount of information that's out there for growers to make an informed decision on the insurance and how to use it as a risk management tool is quite small, so there's a lack of understanding within the consumer base. And at the moment, in general, there's a few different things that kind of make insurance more expensive than it should be. So stamp duty in Queensland adds 10%, give or take, to the price of all insurance products. So, there's a couple of barriers there as well. So all those little things contribute to it being less uptake within probably the commodity groups like horticulture and sugarcane that kind of really want it.
QFF are advocating that the state government consider ditching the stamp duty associated with insurance. Do you believe that will help with its uptake?
I think for existing products, it would definitely help. 10% is quite a hefty saving on a lot of insurance products that are out there at the moment. It just makes sense if the government want people to, be in control of their risk management, and there's these risk management tools out there, they shouldn't be taxing them to make them less attractive for people to take up. So removing that, I think will go a long way into driving some uptake in the industry.
It's my understanding that in the US, the uptake of insurance is way higher than here back at home. How has the government been able to influence that?
It is huge in America, and that's mainly because of government subsidisation. So not only do they not tax it, they also subsidise both the growers and the insurance industry to the tune of billions of dollars to make it a very affordable product so everybody can take it up.
If, though, government was to step into this area, wouldn't that make farmers less resilient and even less self-sufficient?
I think it's the actual opposite. So what insurance can do is take out the financial impacts of disasters. So what that enables them to do is to have money post-disaster. So if, let's talk about cyclone, for example. If you have cyclone insurance and it pays out quickly after the cyclone, you have a chance to reinvest in your farm to improve it and build back better. What we see at the moment is, unfortunately, a cyclone hits. People are in financial stress because of the damages and the lost crops and the lost revenue, and they don't have that ability to invest in farms, improve their practices to make themselves more resilient. So insurance has the ability there to iron out those kind of big financial shocks, and then it gives them the financial stability and the profitability to invest back in the farm to make it the most sustainable and most resilient farm that they can.
The federal government already offer good interest rates in farm management deposits. Isn't that kind of a self-insurance concept? And why would you not encourage the government to maybe increase the interest on that rather than offering insurance subsidies?
FMDs are fantastic. They're quite widely utilised at the moment. We see billions of dollars in there, and they're one risk management tool. So, FMDs. Not everyone has the ability to invest heavily and put lots of capital into FMDs, where insurance for a smaller price, if there's the right product there, you can get that financial stability through a commercial market rather than themselves. So it's just another risk management tool. I don't think they are either or. They can work very complementary. They can iron out people's financial performance over the years, both acting in different mechanisms. So. And I don't think the government needs to subsidise insurance. I think the government role is to remove barriers to improve the market in Australia for insurance and enabling projects like we have actually through the Queensland government at the moment under the Drought and Climate Adaptation Program.
Ross Henry from QFF, who will be in Mackay tomorrow speaking with cane growers about crop insurance.